What's going on? What's going on YouTube? It's been a while. I haven't posted a video in maybe a couple months. And I'm going to get in and out on this one because these markets require my attention. Let's see. I'm making this video today because this market is looking kind of suspicious. We have, looking at, this is the S&P 500. I'm looking at the daily chart. And this is our decline in 220. I'm sorry. Yeah, year 2020, February. And this is the decline to March. And we've been on a pretty vicious run since March. The distance from here to where we are now in price is a key Fibonacci extension. And in Elliott wave terms, it seems that we have a this little move here looks like it could be like a wave 2. And this looks like we could be ending a wave 3. So the bottom line is when you've made a significant move above a prior high, price, it gets exhausted and it tends to have a pullback, a retrace. So we are due to come back and retest this area. I don't think, I believe we're going to have a pretty, nice little decline here, but I don't think it's the end of the trend. I think we're going to retest this area, this peak from February of last year, and we're going to have a pullback. So basically what I'm saying is this nice, neat little trend line that we have right here. Let me see. This is what I want. This nice, neat little trend line. It's going to be broken. I'm going to take this off. This writing I have here, we're going to see, it's going to make sense on the lower chart where I'm headed. So we got a nice little channel right here. And I'm saying I think the price is going to come and break through that channel in search of, not exactly to this line, but in this general area. We are likely going to retest that. Let me go down to the 1 hour chart. What got my attention? Prices on the way up make higher highs and higher lows. And any kind of, and again, as I said earlier, this price area is a Fibonacci extension above this key area from February of last year. So the price is making some suspicious moves in this key area, and I don't mess around. Personally, I don't mess around when I see that happen. This was the final on this move up to the high. This was the low. Well, we had a decline and we made a lower low relative to this low. That's concerning to me because it's suspicious. It violates the rule of an uptrend at a key area. Okay, I got my stochastic saying we're overbought again. We were overbought here when we made this peak, and we're overbought again here, but we don't seem to be. We may not have enough energy to make a higher high. Prices got these, kind of already going sideways. If I was to connect these lows, you see a kind of little arc showing that price is slowing down. I don't trust it. We're failing right along in the area of this sideways movement of these candles before price gave away. So this was the floor in the past. It seems to be functioning as the ceiling right now. Okay, seems to be functioning as a ceiling. So we'll see. We got this this red candle here made a lower low, but then this green one made a higher high. So we're kind of still in a little sideways. We'll see what happens if this goes shorter, but as these candles continue to form and if we start going down. But for me, I don't like it. And again, this is a 1 hour chart we're on right now. In order for this market to make, I guess, flip what I'm saying, it had to make a higher high. And again, I don't trust suspicious activity at a key Fibonacci area. The price area we're in is an area where a wave 4 would come in, where we are due for a decline to correct this big move. This the gain we've made breaking out above the high in February of 2020. All of this run, this nice run, is due for a retrace, due for a pullback. Maybe it comes to these peaks, you know. But that's the technical word on the S&P. I may do another video on Apple. If you want to learn technical analysis, sign up for my Patreon. This is the short version. I go deeper on the channel. I will introduce you to Elliott wave theory, or not. I know, forget introduce you to. I'll show you how Elliott wave theory works, and teach you how to recognize and count the waves, and see this type of activity forming that can serve as a warning before big declines happen. So this is the charts talking to us, and what I see from my technical analysis is danger sign. A reason to be cautious. Today is Thursday. Tomorrow is Friday. Friday will be a telling day, but it might. I'm not going to say it's too late, but if you know technical analysis, you can make a move before then. I'm expressing my reservation right now. The reason why Friday is so important psychologically, if the market closes lower on a Friday, that means that the market didn't have confidence to stay in the market over the weekend. They didn't trust their money in the market over the weekend. And uptrends, FOMO, fear of missing out. That's the sentiment. People are greedy. When the market is going higher, they want to leave their money in the market over the weekend because they're fearful of missing out on gains. But when people when that sentiment starts to turn, people sell on Friday because they're fearful of what's going to happen over the weekend. So I think we're at a pivot point where greed is starting to give way. This was greed. The failure to make a higher high is an indication of fear. And we got another momentum oscillator here showing us that momentum of the uptrend was slowing down. So that's a common thing too. So that's another warning sign. But yeah, the rest I'm gonna say, for my Patreon folks, join me if you want to learn technical analysis. It's very affordable. I'll let you do the work. Come check it out on the Patreon. That's $Will. Will is with one L. I am out. Peace.